We'll get started, and I'll just start off with 3 quotes on communication. Now, for you to effectively communicate, we really must realize that we are all different in the way we perceive the world, and to that extent, the way we perceive information. And we need to use this understanding to guide how we communicate with others. So 2 people presented with exactly the same piece of information might interpret it differently and may understand it differently. Second quote is that the most important thing in communication is understanding what isn't said. So more often than not, what is normally not said is what tends to get lost in the communication. So you being able to decipher a piece of information and understanding what has not been explicitly stated or what is not obvious is the most important thing. And lastly, the 2 words information and communication are often used interchangeably in a business context, but they mean quite different things. So information is giving out, whereas communication is getting something through. So you may give a piece of information to someone, but you may not be communicating at all. And that's in the context of business, you'll always hear arguments of, I thought I gave you this piece of information, but now what an individual did with it was totally different depending on how the communication was put through. So what we have on the agenda for today, there are 3 key items we'll be looking at. First is on stakeholder management, which is very key and forms an important component when you're communicating. So who are your key stakeholders? Then we'll touch on managing deliverables. And again, this is in the context of the business, but again, can be generalized in different aspects of your daily lives. Then lastly is just looking at clear and concise written communication, but it also applies to oral communication as well. Communication can either be written or oral or visual in that sense. So just starting off with stakeholders management. The first point that you probably need to understand whenever you're dealing with a business entity, a client, or any person is who are your key stakeholders. Now, you can either have external or internal stakeholders. If we look at external stakeholders, this could be your customers. Now, more often than not, whenever you are crafting a solution or a product, you'll be thinking about who your customers are, yeah, and what are their needs. Now, of course, when you're crafting a solution, it needs to address a need that is identifiable in the mind of your customer. If you develop a solution in a boardroom, without customer engagement, then you'll find you'll pass it to the market, and it won't. The reception will not be quite as what you expect. So customers tend to be the focus point of every business because they're the ones that basically consume whatever products you'll be churning out. You do have your local community whom you need to engage. You've probably seen in various forums around community engagement. So all businesses operate within an environment, and it's important to take into consideration your local community. So what are the nuances that the business is operating within? The community, what are their needs? You'll find you may need to engage different stakeholders within the local community depending on the nature of your business operations. it's unlikely that any business would exist without a creditor of any sort, whether it's a lender or a supplier in that case, who may extend different services on credit. So you'll need to clearly map out who your creditors are and also clearly map out who the suppliers to the business are. Now, you've probably seen in recent times the government fiscal and legal environment and regulatory frameworks also play quite an important part in the operations of any business. Of course, there are going to be certain prescribed rules and regulations, which are basically laws of the land, within which the company and by extension, the individual needs to operate within. So it will be important to just understand what the impact of the government and the laws of the land will have on the business. Then there are also internal stakeholders that you'll need to manage. You have the business owners or shareholders of the company who may provide capital for business operations. They may set the strategy through the board on how they feel the company needs to be steered. We do have the board of directors who just provide the overall governance framework and provide direction on how the company needs to be managed. Then you do have the management, which includes senior management, junior management, who then deal with the day-to-day management of the company. Then now you have employees who then steer the conversation around meeting the business objectives that has been set by management and the board of the directors. So whenever you're dealing with a particular stakeholder, you basically need to know who you are dealing with and what their interests are within the company. Now, that said, it's critical to map your stakeholders. Now, this is a particularly important exercise because it will help you to determine who your stakeholders are and how much engagement or communication is needed. And this will change from time to time depending on the nature of the engagement that you are handling and in particular who's the stakeholder involved. Now, you can think of stakeholder mapping as a 4x4 matrix. And if you are able to understand how this mapping is done, it will basically help you learn how to prioritize your engagement with your stakeholders and just focus your attention on having an impactful interaction with them. Now, I'll just walk you through the infograph that is on you are right, rather on the left side of the screen. Now you'll have on the vertical axis the stakeholder interest and on the horizontal axis the stakeholder influence. And it's a 4x4 matrix, a combination of both the interest and the influence. Now, if we look at the lower left portion of that infograph, you'll have stakeholders who have low interest in what you're doing and also have a low influence in potentially how you're executing a piece of work. Now, for such stakeholders, you'll find that there's going to be minimal contact with them and any information that you share is going to be essential. Yeah, for stakeholders, sort of mapping is an important exercise. And I also mentioned that by you understanding the mapping matrix, you'll be able to know how well to prioritize your engagement with your stakeholders and do it in a manner that is most impactful. So on this infograph, you have the vertical axis, which shows the interests that different stakeholders would have in your engagement. Then on the horizontal axis, you have the influence that they are going to have. And I did mention that the nature of your engagement, depending on the task involved and whom you're engaging, will affect how you map a particular stakeholder in this chart. So starting off with the bottom left section, you'll have stakeholders who have a low interest in what you're doing, and they also have a low influence. And for such stakeholders, you'll find that there's going to be basically minimal contact, and any information that is provided should be limited to only essential information that they may require. Now, as you move towards the right, still on the lower part of the curve, you'll have stakeholders who have low interest in what you're doing, but they have a high influence in the manner with which you execute a task. So it's important to anticipate the needs for such stakeholders because of the high influence that they have on the work or on a project. And you also need to have a regular monitoring mechanism with them. Now, as you move on the upper section of the curve, you'll find that there are some stakeholders who have high interest in a piece of work or a project, and the influence that they may have on the project will be very, very low. So that said, it will be important for you to closely monitor these stakeholders and also inform them may be required to really have a high level of influence in a project or a deliverable. Now, where you want to be focusing your energy the most is on the upper left, upper right section of that chart. So these are stakeholders who have extremely high interest in what you're doing, and they also have a very high influence in the manner with which a project may be done. So to keep these stakeholders satisfied, regularly engage them and just take into account their input through different phases of the project. So that said, if we just circle back to the previous slide talking about external stakeholders, internal stakeholders, you can just try and think through where each of these stakeholders will be mapped depending on the engagement. Now, the caveat here is that this matrix will change depending on the nature of engagement you have with that particular customer or other stakeholder. So for instance, if you're setting a business with the shareholders, the owners of the company, of the shareholders, will have a high level of interest around the strategy, and they'll also have a high level of influence in how the strategy is going to be set. Now, the customers, on the other hand, are going to have low interest in how you're setting the strategy, and they'll probably also have low influence in how you are setting it. Now, if you are to flip the conversation around you defining a product for a customer where they're going to be the ones consuming the solution, the customer will have a high interest in how you craft the solution, and they may also have a high influence in how you deliver it, because remember, you deliver solutions to serve the interests of a customer. So whenever you are having an engagement with any stakeholder in the context of a business or even outside of a business environment, it's just important for you to map out how they lie in the stakeholder matrix, and just looking at their interests as well as the influence that they'll have. Now, key to managing your stakeholders is understanding the potential conflicts of interest. Now, like I mentioned, you'll have different stakeholders, but their interests may not necessarily be aligned. by satisfying the interest of one stakeholder, it will mean that you won't be meeting the interests of another. And let's just look at a few examples, just touching on different stakeholders that may exist within a business. So starting off with shareholders, their key interest would be to maximize the profits for the company and add shareholder value to their equity within the company. A potentially conflicting interest with that interest is that they may want to cut costs that may affect the quality of the product or the solution that they are offering to customers. So the customer may be on the receiving end around maximizing profits and shareholder value. They may need to pay more for a product or a solution. And also a stakeholder who may be on the opposing side of the shareholders' interest may be the employees. So by maximizing profits, they may want to minimize the operational cost. So that means suppressed bonuses, if any, or no salary increments, just to try and maximize profits. Now, if we look at employees on the other side, their key interest will be on having fair wages, so wages that are commensurate to the level of work that they do. So for instance, if you assign more work to an individual, they may require that additional compensation goes in as well. Employers are looking at job security and good working conditions. Now, the conflicting interest for that will be the company's profits, and this is touching on the shareholders' interests, may be impacted because by virtue of you paying well, having good employment terms, then it will mean that it's going to come at a cost to the shareholder and the company. For customers, they are looking for high quality products at the most affordable costs. And that seems to be the highest sort of conflict for a customer because they want the best possible solution or the best possible products. But more often than not, they are normally willing to pay the least possible price for it. And that is now what normally introduces some level of good competition within the market, but potentially introduces unethical business practices that you also need to be wary of. So that may impact on the profitability of the company if they try to push the profit margins low or just get into a cost cutting exercise where some stuff may be laid off. Businesses are increasingly becoming aware of ESG requirements, or environmental, social governance. So key interest will be to introduce sustainable and eco-friendly products and solutions. But what that will, of course, mean is that the cost of production could potentially increase. And you'll also find that some customers are normally very particular with how a particular item has been manufactured. So for instance, if renewable energy has not been used, then they may not be keen to purchase the solution. If it has not involved fair trade practices or involved the local community, then they may not be willing to purchase the products. I mentioned at the start that the local community plays a key role in how a business operates. So you'll find that there may be certain requirements around job creation within the local community, how the business will spur economic growth. Conflicting interests for that will be just environmental concerns. So how they may purpose the business to serve their best interests may not be well aligned with the best interests of the environment. Then lastly, just looking at regulatory agencies, the government, their key interest is compliance with the law in the laid down regulations. And of course, the different stakeholders who are involved more often than not will want to look for loopholes within regulations that serve their best interest. So whether you're looking at employees who will want to pay the least possible income tax as much as possible, whether you're looking at the company owners who want to pay the least possible corporate tax as much as possible. So these are potential conflicting needs that you need to be potentially aware of as you are dealing and engaging with different stakeholders. So just in the context of this particular example, and it's not really exhaustive, you can just think through of the potential conflicts that may arise even from your own workplace, if you're currently working or you've interned somewhere, worked somewhere in the past. Just think of the potential conflicts that arose even within a company. You'll find that there could be potential conflicts. For instance, if it's the marketing department wanting the least possible price, but the commercial department wanting to drive the profits as much as possible. So it's important really to find a balance that ensures that the business operating environment is profitable, there are good working conditions, customers are satisfied, and of course you are there to any laid down regulations and also contribute positively to the local community. Now, balancing these interests is both a science and an art. A science in the sense that you need to take an objective view when you are looking at how to meet the interests of these stakeholders, but also an art in the sense that you need to learn how to engage different stakeholders and get their buy-in. More often than not, as you rise through the ranks in your career, you'll realize that what you know is not really important, but it's actually how you engage the different stakeholders and how you put across what you know. So for instance, if you're offering a financial service to customers and your systems have a downtime, how you actually communicate that to customers and how you put it across and when you put it across will actually make the difference around whether your customers will be upset around the downtime or they'll understand the issue that has been involved. And this is something that will take time, admittedly take time for you to develop within your career. But that notwithstanding, it will be important for you to consider the impact that the course of action, whatever course of action you take, will have on the stakeholders that are involved. Now, the second part of the presentation will then look at managing deliverables. So a question is, for you to manage a deliverable, you need to understand what a deliverable is to begin with. So a deliverable is simply a result of a project produced during the execution of the project task. Now, this could either be the end product or it could be a result of the project that is produced by performing various tasks. Now, that said, a deliverable may either be tangible or intangible, meaning that you can actually touch it, feel it, or it may be intangible. But the impact, whether it's intangible or not, needs to be either visible or evident by virtue of you having a clearly and well-defined outcome. So if you think of deliverables in the context of a project, it could be, say, formulating a marketing strategy for the business. It could be making certain updates to the project governance team. It could be working on a project documentation, so you clearly capturing the steps involved in a project, or it could be the final end result of a product. So any output within a project can be a deliverable. So whether you're starting off with a research, whether you're working on a report, whether you're providing certain equipment, documentation, or just having the end result. Each and every component within a project can be defined as a deliverable. So the question is, how then do you manage a particular deliverable that you are assigned with? And again, this needs to be done in the context of meeting the stakeholders' needs and expectations. We've just talked about stakeholders and their potentially conflicting needs. And how do you do that in a manner that achieves the goals of the project? So there are just a few key steps, general principles that have been aligned to help you understand how to meet a project deliverable. Now, the first thing is that you need to define the deliverable clearly for the project. And this could be a product that needs to be done, a report or a service or any other outcome. Now, I've seen from my own perspective, people starting projects without a well-defined deliverable, spend a lot of resources, spend a lot of time, get to the middle of the project and actually realize that what they've been working on is not what was actually required by a particular stakeholder. So before you begin any piece of work, if you are an actuary, before you begin any modeling work, if you are a marketer, before you begin marketing a product, really understand what is the end goal. So what are you required to achieve? Now, only then can you set out to work on that particular task. And you can use a SMART framework to clearly define your deliverable. So ask yourself, is it specific to the task at hand? Can you measure it, or is it open-ended? Any deliverable that is not measurable is a dangerous deliverable to have, because once you execute it, you won't know whether it's successful or not. So you clearly need to define what will be the measures of success for that particular deliverable. Then ask yourself, is it achievable based on the scope of work that has been defined? Will it be relevant to the stakeholders involved? Again, there are many perfect examples of companies that have gone at lengths to and spent billions crafting up a solution only for the customer to say that it's not relevant to them. Then it also needs to be time bound. So we are operating within limited resources, limited time. So whatever you're delivering needs to be time bound. It can't be an open-ended task. Then secondly, you need to break down the deliverable into various tasks and subtasks. Now, this will help you to understand what is required for each task, assign various responsibilities, and track the progress. Now, this is particularly important when you're dealing with large projects which have different moving parts. If you don't break it down into smaller bits, you'll find that it may be hard for you to keep track of the larger project. But by you breaking it down into various parts, you'll know who needs to work on what task. And when you break it down, you also need to assign the different resources across each task. Now, when you do that, you'll realize that there are some resources that will cut across all the tasks, and those are going to be your critical resources that you need to keep tabs with. There are those that can work on different components around different tasks, which may not be as critical for you to have the deliverable done. Thirdly is you need to set milestones. So milestones are simply checkpoints along the project timeline. And this will enable you to clearly map out what needs to be accomplished at a particular point in time. Now, the beauty of having milestones or checkpoints is that it will help you to identify any delays earlier on in the project before the delay actually occurs. Now, like I mentioned, you'll have different stakeholders within a project. They'll have different needs. They'll need to be appraised, and they'll appreciate if they are aware of a potential delay in a deliverable well in advance before that delay actually occurs, and they may actually provide a steer on how to remedy that potential delay. Fourth is that it's important to know how to assign responsibilities to team members against each deliverable, task, or milestone. Now, it's normally very risky if you have someone within a project who basically does everything or who knows everything about the project. That introduces a key person risk. So it's important to assign responsibilities based on members' strengths, but also just being cognizant of the fact that you may want to upskill other members by enabling them to learn certain tasks that they may not have experience with. So it's a balanced approach that you need to take. Now, assigning roles and responsibilities also ensures that there is clear accountability, and it basically prevents confusion on who is responsible for undertaking a particular task. There are different project management tools that you can use to manage a project where you basically lay out what needs to be done. If you have different people working on a particular task, you always need to map out who is the key person responsible, and that key person will be in charge of ensuring that the different people working under that particular subtask actually achieve what and execute what they are expected to do. I've talked about resources being finite, so you need to ensure that all the necessary and required resources are allocated, whether it's personnel, whether it's materials, whether it's tools. You may have the best resources, but if they are inadequately resourced in terms of materials or tools, then they may not actually be effective in how they deliver. And an analogy that I'll use for that is, you can have the same car entering into a rally, but different drivers will achieve different outcomes depending on the level of their skill. So the resource may exactly be the same. And you'll also see this in the context of an environment, business environment, where an individual may be assigned less resources, but is able to execute and have a better outcome compared to one who has more resources at their disposal. Now, it's important to continuously monitor the progress of a particular project. That includes the deliverables and tasks. I've mentioned that there are quite a number of project management tools and software that can be used for this. They just keep tabs on who's responsible for what are the completion rates, and just identify various blockers that may arise. Now, it's also important for you to maintain open and transparent communication with all stakeholders and members of the team, and just regularly update them on any the progress of the project, what are the potential challenges, and if there's a change in scope of the project. Now, it's again very unlikely that a project may go to execution without the scope changing, and that just outlines the dynamic nature around which the business operates. So if there is a change in the scope of the project, then that needs to be communicated earlier on. Now, part of being a good project manager is knowing how to manage any scope changes within the project or a deliverable. Now, the change in scope may come as a result of a stakeholder has basically requested for a scope to change, or has requested for an additional task to be delivered, or item which basically changes the initial scope of the project. So it's important to undertake the feasibility of that change in scope. So don't just accept a change in scope without understanding the impact that it will have on the project and the impact that has on the timeline. Some scope changes may be accommodated within the budget of the project, but others may fall fundamentally outside the budget, and this needs to be communicated to the various stakeholders involved. Lastly is to have a quality control mechanism. So you need to ensure that each deliverable meets the required quality standards. And it's important to have different checks and balances in place. So whether you're looking at system integration tests, if it's in the context of a software, whether you're looking at user acceptance tests for a product or a software that you've developed or a solution, and regression tests. So regression tests is once you've taken the product to the market, that continuous monitoring, how well does that come back into the product design process. Now, there are different ways you can deliver projects. The two main ones are Waterfall and Agile. So these are the two main methods used to deliver various projects in the context of different business requirements. Now, I'll just walk you through what Waterfall and Agile means. So if we look at Waterfall, it basically requires you to have quite a detailed planning at the start of the project, and all the steps that will be required within the project executions are laid out. All dependencies are mapped, and you can only move to the next stage if you've completed the previous one. So you can't jump a stage. You need to execute the previous one, then go to the next one. Now, if we look at the benefits of using Waterfall, one is that it's best for projects that deals with physical objects. Like I mentioned, a key principle for Waterfall is that you need to complete one phase before you go to the next phase. And it's best for projects with defined tasks that needs to be completed in a specific sequence. So for instance, you can't build the second floor of a building before you complete the first floor. Yeah, it's not structurally possible, neither is it technically possible. Then it's also good for project plans that are repeatable or identical. So you can basically, if the project is to be replicated in, say, a similar fashion, then Waterfall will be a good methodology to use. The disadvantages of this is that it requires a substantial scope and schedule of planning before work actually begins. So a lot of work actually goes into the preparation phase before the project starts. If there are any scope changes, it can be slow and require a change control process. And I'll just again use the analogy of you constructing a house. You'll go through a rigorous approval process, involve the county government, involve the structural engineer, electrical engineer, your plumbing works, etc. If you decide to change the building in any way, then it will mean that you'll have to go through the same approval process, potentially have a redesign, etc. So any scope changes can be very, very slow, painful, and quite expensive to execute. Then Waterfall is normally less effective for software and other non-physical services like financial services. Now, if we look at Agile, which is a methodology that is normally adopted in financial services and non-physical related projects. So this is a fast and flexible approach to how you manage the project. There's really no order, and I want you to take that with a pinch of salt compared to how Waterfall is done. Now, the benefits and the pros for this is that it's best suited for projects that are service oriented, so non-physical. It allows you to quickly course correct based on a stakeholder feedback. You can basically quickly plug in their request into that, iterate, and move forward. It empowers teams to work creatively and collaboratively, and it allows for inclusion of all modes of engagement and collaboration from team members. Now, the downside of Agile is that it's not suited for project with a strictly defined requirement and scope. If the project has a well-defined requirement and scope, maybe Waterfall may be the best route. You may use Agile, but it may be not churn out as well as you might have in Waterfall for such a project. There could be uncertainty around the scope and schedules because you're basically being very dynamic and agile in the sense of the word. You want to incorporate any feedback as it comes, iterate and move on. Then it requires you to have a clearly defined backlog. So what a backlog means is that it's the set of tasks that you need to accomplish. You'll put them somewhere and you'll basically be understanding what, or basically prioritizing what you need to execute first within the backlog. Now, the last part of the communication, looking at, we are set 8 minutes to the top of there, so I think we are well within time, is to learn how to communicate clearly and concisely. Now, there could be no better way to demonstrate this than just having one slide that just sums up the 7 C's, what are called 7 C's of effective communication. Now, the first C is being clear. Now, whenever you're writing or speaking about a goal, a task, or a message, you need to ensure that it's as clear as possible. And this really is to just try and to minimize the number of arguments or miscommunication that you can have with your message. Now, being concise is about being brief and sticking to the point. Whenever you're communicating, you need to avoid lengthy sentences that may add no value to what you are saying. And whatever you want to communicate, you need to use the least words possible. And again, remember, you'll be dealing with different stakeholders. You might require a key decision. So you really need to be concise and as brief as possible. Thirdly, is you need to be correct, so make sure that your communication is accurate and it fits in within your audience. If your audience is technical, yes, it makes sense to pass across technical messages. If your audience is non-technical, you need to be able to break down the technical jargon in a manner that can be understood by a layman. Fourth, information needs to be complete, so make sure that whoever needs to make a certain decision receives all the relevant information that is required. Now, you'll waste a lot of time going back and forth, providing information in a piecemeal manner, simply because whatever you're providing is not complete or is inadequate. The fifth C is you need to take due consideration when you are communicating. So use facts rather than opinions. At times it's important to share out your opinion, but it's important to use facts as much as possible to put your message across, and make sure that whatever you're putting is across is correct and free of errors. Sixth C is just ensure that your message is concrete and suitable for the audience. So, you need to ensure that it paints a clear picture of what you're trying to communicate, and there is no room for misinterpretation. So the best way to gauge this is if you are to give 2 or 3 people a piece of communication, will they have make the same inference around it? And this is particularly key when you are communicating your recommendation to the business or a stakeholder. Any 2 sets of stakeholders with similar interests reading it should arrive at the same conclusion. If they have different ideas around what needs to be done, then it basically means that your communication has not been concrete. Lastly is you need to be courteous in how you communicate. Courtesy goes a long way in communication. Of course, you'll find that as part of project delivery, dealing with different stakeholders within the business, it's going to be a high pressure environment. You know, you need to work late hours at times, respond to emails which may have been written in a harsh tone. So it's always important to maintain decorum in your communication, be courteous as much as possible. It doesn't, break a bone to be courteous, and just ensure that the conversation and engagement that you have with stakeholders is open and honest. So with that, we are at the end of the presentation. Thank you.